Okay guys, welcome back to a brand new video here. Today we're going to be trying something a little bit different, and that's going to be a podcast style kind of thing. There's going to be essentially, I guess, the pilot episode depending on how this goes. But of course I do have a special guest today, and that is of course Ryne Williams. So you can see him on screen there. Do you want to say hello, Ryne?
What's going on, everyone?
So yeah, basically what we're going to do in this is, as I said, it's a bit of a podcast style kind of thing. So if you want to just throw on the audio and go off and do your own bits, or you want to watch the visuals, we'll have them up for you as well. But essentially what we're going to do is talk about all things stocks. We're going to have particular reference to dividends. We'll go into a bit of a background on myself and Ryne and how we got into investing, and we'll just kind of take from there. So just a bit of a general discussion. So I guess to kick us off, Ryne, if you want to give us a little bit about yourself, maybe your age, where you're from, and kind of what your whole YouTube channel is based around, I guess.
Absolutely. Well, first of all, Darren, thank you so much for having me on your channel once again, man. I'm super excited to chop it up with you, and I'm guessing that a lot of the viewers out there are not aware of me. I'm sure most of them are from Europe, such as yourself. And I am out here in California. I'm based out of Sacramento, California. I am 28 years old, and my channel is focused primarily on dividend investing. That's pretty much all I talk about is dividend stocks. So really niche down.
Yeah, cool. So I guess we'll get into a little bit about your YouTube channel and I guess why you started that, or maybe first we could say like when did you get started investing. I think that would probably be a good stepping stone to then go into maybe why you started making content and how you came about making your YouTube channel.
Okay, for sure. And I apologize in advance if this becomes a long story. One thing you guys will learn about me is I'm probably like the world's worst storyteller, but we'll give it a shot. So I started investing technically maybe like 10 years ago. Growing up, my parents created a custodian account for me, which is essentially a brokerage account that they managed. And every time I had like a birthday, or every time it was Christmas or whatever holiday, basically my gift from them would be money to invest into that portfolio. So for the last 10 years or so, all my birthday money, all my Christmas money would go into this custodian brokerage account. And then I really actually myself took interest in it maybe late 2019, maybe going into 2020. And
so just quickly on that, for that custodian account, is that like we have them here as well, but they're not really as popular, but is that when you turn 18 you get access to that, and I suppose they become your stocks and your investments?
Exactly.
Is that how that works?
Exactly.
And then in terms of what that custodian account was invested in, your parents obviously sound like very smart people doing that with your money. Did they kind of pick the stocks, or was it just something like into some broad index funds or things like that?
You know, it was actually kind of like a team effort. My dad was really the one who started it, and I think anytime there was a trade to be made, or anytime there was money contributed to that account, he would try and involve me in, what do you want to buy? Like, what stocks do you want to buy? And me being like, not very old and not caring that much, I'm like, I don't know, I have no idea. And so the first, pretty much those first 10 years or so, I wasn't choosing any of the stocks. I was there like watching him buy them, but I really did not have much involvement in it. And the first handful of stocks that I had in this portfolio were ones like Berkshire Hathaway, BRK.B, Sirius XM Radio, which ticker symbol SIRI, and I'm trying to think, there were some other ones as well, but I don't quite remember. And then I had a handful of like different ETFs, like SCHD, which is a Charles Schwab ETF. And I had probably 3 or 4 different Schwab ETFs in that account. So it was kind of basic stuff, nothing too crazy. Yeah.
So I guess when you took control of that at 18, then were you interested in it by that stage? Like obviously when you're like 14 or 15, you're not really knowing which stocks to pick, but were you kind of like, okay, I'm going to take this on myself now, or you just kind of let it do its thing for a couple more years?
Yeah, I just kind of let it do its thing for a couple more years. It really wasn't until so I'm 28 right now. It really wasn't until I was probably 23 or 24 until I started to have some sort of interest in all of this investing stuff. And even at that point, I didn't contribute money to this Charles Schwab account because I still didn't know anything about investing. I still didn't know what stocks to buy. I still had no direction on what I was doing. And so, but I wanted to somehow get into it. And I don't even know what sparked this interest for me at that age, but I started off with just opening like an Acorns account. Are you familiar with Acorns? Yeah, so I started off with an Acorns account.
Yeah, I think I've heard of it. It's like, so every time you spend a bit kind of goes into an investing account or something like that, yeah?
Yeah, exactly. And essentially Acorns it's very hands-off, automatic investing. and they just basically put your money into different Vanguard ETFs from what I remember. So that was really the first thing I did on my own as far as investing goes, and I probably had an Acorns account for a couple years, and then I decided, okay, I kind of want to do a little bit more with it, so I changed from Acorns to Stash, which is another like investing app, which is very similar to Acorns, where you can have it as hands-off as you want to be, but they also give you a little bit more options as to what to invest in, so you can invest in different ETFs, very basic stuff, or just like a few individual stocks, maybe like Apple or Coca-Cola or a lot of the bigger ones,
Some of the
Home Depot, stuff
ones,
like that. Yeah. And so then I rocked with Stash for another year or so, and then I decided, okay, I'm pretty into this stuff. I want to completely choose everything I'm investing in, and that's when I transferred. So I went from Acorns to Stash, then from Stash to Robinhood. And I'd say when I switched to Robinhood, that's when I really started getting interested in this stuff. And that was probably 2019. And then...
Okay, so somewhat recently, I guess you could say you really got into it. You move up to an app like Robinhood where you have more choices and kind of...
Right.
Yeah, just more options, I guess, and you need to learn more about it. Like so.
Yeah, exactly.
That's really interesting. So, probably the last 2 years, and then in terms of the YouTube channel, so obviously you were interested in investing for a number of years, and you kind of took it seriously, I guess, from 2019. And then in terms of the YouTube channel, I've seen that your channel has been around for a while, but I've seen it started off at like just some kind of casual vlogs, I guess, that were up there. I'm not sure, I didn't really watch them ones, but was that just kind of for your own kind of your friend circle and that? And then as you started to get into a bit more, then you just, I think over the last 9 months or so even, you just got into stocks and kind of took from there and focused the channel on that.
Yeah, exactly. I mean, I think I made my channel back in 2015 or maybe even 2013. It was a while ago, but like you said, the first many years of that channel, I was just putting out, anytime I would go on a vacation, or me and my friends used to do these food challenges, so I would just put up these random videos of places I've been or things I was doing. Yeah. And then, like you said, I even tried my hand, like seriously, like being a vlogger, and that was probably my first attempt at really like trying to grow the channel. But the vlogging thing, it wasn't for me. At least not at that time. It was not for me. Yeah. And so, with that said, I fell off. I stopped posting, and that I probably tried from maybe 2017 to 2018 to do the vlog thing, but it just was not for me.
And did you have any success in terms of like the channel growth and views and things when you were going for that, or just kind of like this isn't working kind of thing? Not
really, man. Prior to posting finance videos or videos on investing, my channel had maybe 140, I think exactly 145 subscribers. And that kind of leads me into what I'm doing now. Back in October of 2020, so almost a year ago, I don't, during the pandemic and stuff, I just had a lot of time, so I started learning more about investing and watching investing videos here on YouTube. And I really came to enjoy the concept of dividend investing. Just from watching videos on YouTube, I really started to develop a good understanding of what it is and the potential that it has, at least in my opinion. And I remember there's one specific channel in it that I still watch and I really like. It's the Dream Green Show. Have you ever watched that channel?
No, I haven't heard of it.
Yeah, so I was watching the Dream Green Show, and the host is this guy named Zeke, super cool guy. But I was watching his videos on dividend investing, and I was just like, it just kind of hit me like a ton of bricks one day, and I was like, I think I could do this. Like, I think I could make videos on this. And just a little side note, my background, just my day job and stuff, is in digital marketing. It's in social media marketing, and it's in content creation. So I had a lot of the skill set to make these videos coming into, posting consistently on my channel. And so I was watching Zeke's videos and I'm like, I think I could do this. Like, it doesn't seem like anything too crazy. He's just talking about what he's buying, what he's selling, kind of more documenting his dividend investing journey. And I'm like, that really appeals to me. That seems really cool. And so after having that first initial thought, this was back in September of last year, of 2020, I kind of chewed on the idea for a few more weeks. And then I just was like, you know what else am I doing? What else am I doing with my time? I got a lot of free time. I might as well, make something productive out of it. And I knew that doing so, like making videos on investing or documenting the journey, talking about it, I don't know if it's the same for you, but talking about it really helps me learn more about it. And as you know, there's a lot to learn with this stuff. And so I figured it would be a win-win situation where, one, I could a productive way to, spend my time and hopefully grow this channel. And also, on the other hand, by talking about it, I can learn more about this new thing, which I've started to become really passionate about or really invested in, like no pun intended. So that's kind of how it started for me making finance videos or, dividend investing videos.
Yeah, and even in the last, I'd say, couple of weeks or anything, your channel's really started to take off. So that's obviously great to see.
Thanks, man.
With YouTube, it's really all about that consistency, isn't it? Because like you can start off, you say this looks easy, and you put up a video, might get 20 views. You're like, it sucks or something. I put so much work into it. You could spend 5 minutes on another video and it absolutely takes off. So it's just all about that consistency, I think, for YouTube. But I think I'll just touch on as well for my viewers how I got started, I guess, because I've never really addressed that before.
Yeah.
So something similar to kind of your story there. So, well, previously I used to do YouTube. Like we're talking back in the day, I was one of them kind of gamer guys that was doing videos on YouTube, and I had a bit of success with that. So I had a channel that grew to 30,000 subscribers. So that was 2016 or something, but it was with gaming, and I kind of grew out of that just as I got a bit older. And it was something that I started to lose enjoyment on, because I'd find myself just hopping on to record a video, and you kind of have to have a good personality and like really hype yourself up for the video, and then once you're done, you're kind of like, like you're not really in it, you're kind of putting it on, I guess, a little bit. So it got to that near the end of it, so I was losing the enjoyment in that regard. So like I still enjoy playing the odd bit of Call of Duty, but when I was hopping on just to record a video and then have to do all that, it kind of took the joy out of it. So that's just a bit of background on kind of YouTube. I had a bit of familiarity with it, and I had the equipment and things like that. So but then I stopped that. Then I guess I kind of got started into investing. So I'm 20, just turned 25 years old there, and I got started investing. I think it was February 2020. So just about one and a half years ago. And like in Ireland, it's definitely not as big as the US, the country, and their appetite for investing. But I feel like there just wasn't any content that was kind of tailored to Irish people. Now I know that there's definitely a lot of content. I watch people like Graham Stefan and Andre Jick and them guys, and I was like, this stuff, like, it's applicable to Ireland, but then some things like the taxes and all, like you have long-term capital gains tax and short-term capital gains tax, and it's just completely different in Ireland. You only have one rate, and there's different kind of things involved with that. So I was like, there's not really anybody that I can see doing this right now. So I think there'd definitely be a bit of a niche there, but I could appeal to people like, in the United States as well, because I have my own kind of say on things and my own different opinions there. And they're obviously US stocks I'm talking about and worldwide stocks. So it kind of applies to both kind of regions there, but then also have a bit of a focus on, I guess, the kind of Irish audience. So I just decided to go for it. I think it was because I wasn't doing too much. Like I'm obviously working full time, but when you're at home, you're working from home is what I do, and you're in the lockdowns kind of thing, as you were saying. You're kind of like, what do I have to lose? I have this bit of free time, I might as well go for it. So had the equipment, didn't really have an excuse, so I just went for it and started to make videos. And I seen it was quite interesting, because I remember on my previous channel, like, it took a couple of years to get a bit of success, like even to get maybe the first 1,000 subscribers. But I think maybe because finance is such a niche, they're definitely competitive in terms of YouTube, but it's maybe not as competitive as something like gaming or something. And that combined with TikTok, and I guess that there's not too many Irish people doing stocks, I think that really kind of, I guess, blew up my channel. I know I'm still a small channel, only 3,500 subscribers yet, but I think like it only took me like a month to get 1,000 subscribers or something. So it was like very, very quick, like in terms of that. So that's a kind of bit of background to why I got started. I was interested in the space, and then I thought there was a bit of a gap in the market in terms of bringing Irish perspective on things. And then I just kind of utilized the marketing side of TikTok as well, which I think is absolutely amazing. Might touch on if you've done that yet. And that's kind of led to me where I am today. So, but have you checked out TikTok for that kind of marketing kind of side of things, or have you just been consistently kind of uploading to YouTube?
Yeah, I when I first started uploading to YouTube, I also was starting to post on TikTok, and TikTok became a little too consuming for me. So were you
kind of re-chopping your YouTube content for TikTok, as in like you'd only record the one video and then cut smaller edits for TikTok, or were you doing like dedicated TikTok content?
Dedicated TikTok content. And maybe that's why I went wrong. Maybe I should have recycled some of the YouTube content for TikTok. I actually hadn't thought about that. But yeah, I was making content specifically for TikTok, and it was okay. It was fine. My TikTok page was growing too, but I was like, nah, I'd rather really just double down here on YouTube.
Yeah, no, that's fair.
But nothing. I mean, I've also seen a lot of people who get their start on TikTok or grow big on TikTok and then transfer it to YouTube, and now have successful YouTube channels. I can think of probably 2 or 3 different creators off the top of my head in this space who have done that. So there is something to TikTok for sure. It just, I didn't want to, like I said, I wanted to double down on YouTube and really just focus on one thing. And I think...
No, I get that, because I've even got comments saying, like, do you have an Instagram, do you have a Twitter and things? And I'm just like, I just want to focus on, even I'm doing kind of TikTok and YouTube, but the one, like, that's enough for me, because obviously the more things you take on, the thinner you spread yourself, and you can't focus on that content more. So I think for me on TikTok, it's easy in terms of once you have the idea, it's quite easy to make a video on TikTok, whereas with YouTube, obviously, you're going to take a couple of hours to record and edit and all them kind of things. But with TikTok, I could have an idea and I could have the video up in 2 minutes kind of thing. So it's good in that sense, and I can recycle some YouTube content into shorter form content. So they're kind of linked in that regard, but I definitely get what you're saying in terms of I want to kind of dedicate my time to bringing out high quality YouTube videos.
Yeah,
for sure.
And that, at least in my case, that might change. Like, I might start posting on TikTok again, or I don't post on anything on Instagram either, where I actually have somewhat of a following. I have like 17,000 followers on Instagram. That was from a past life. I used to post on there big time, and I might go back to doing stuff like that. But like I said, I'd rather just put it all into YouTube right now, really hoping that I can make this, make a living doing YouTube. I think I'm sure you've seen this too. It's really not out of the realm of possibility to achieve that. We see so many other people out there doing YouTube full time, and they started just like us, man, from scratch. So, and I'm sure the same is for you. Every day you see your channel continue to grow. Some days it's slowly, some days, you gain a lot of subscribers or have a lot of views on a video. And it's those moments where I'm like, yeah, this is right. I got to just keep on keeping on with YouTube. And I don't want anything to distract me from that, really, except for my day job, because you still got to make a living. But, outside of that.
I think we'd be lying if we said we're doing YouTube solely for the enjoyment. Like, obviously you're doing it as a sort of a side hustle because, you're bringing knowledge there and you would like something in return. Obviously, we're happy now that we're getting a small, maybe $100 a month or just a small amount of money each month. And that keeps us going, that keeps us motivated. But I suppose the overall goal is to kind of, seeing as we're both passionate about investing, would be to kind of turn it into a job. And I think YouTube is definitely an avenue for that. So I think, people always say don't do YouTube for the money. And of course, if you're doing it solely for the money, you won't get anywhere, because that passion needs to kind of shine through to your viewers, and you need to obviously know what you're talking about and provide some real value there. So I think you can do it for the enjoyment, but if there wasn't the opportunity to maybe turn into a job or make some kind of streams from it, obviously, like, we just wouldn't be doing it because it wouldn't be worth the time. So I think that's everyone even watching, like, I think you need to be true to yourself about what you're doing and recognize, like, the opportunity that you have here. And as Ryan said, like, there's people who can really make a good living out of this. It won't happen for everybody, but if you don't try, you never know, I guess. So yeah, absolutely.
And like you said too, like, to get there,
go on, yeah.
I was saying, sorry, last note. And like you said earlier too, to get there, consistency is one of the biggest variables that can make that happen, for sure.
Absolutely. I've seen so many channels, even in the kind of Irish investing space, where they're going well for a while, they're consistently uploading, and then they just kind of drop off because, as I said, they may not get that kind of recognition. They're putting in a lot of effort. Like, this can sometimes be harder than your day job, I guess, doing YouTube, because it's a lot of stuff. Like, you need to come up with the ideas, edit the videos, put them up, and then market yourself, and there's a whole lot to it. It's like running your own business. Even if it's a small channel with 100 subscribers, you still have to do the same amount of effort as someone with, like, thousands of subscribers. So it definitely takes a lot of effort, and it's not easy. So I think consistency, it's all about, like, I could say I'm going to upload every day for a month or something, and I could do that, but then I'd be burnt out, and then I'd lose the consistency. So I think it's all about finding something that works for you. Like, I try to do 2 uploads a week. I don't always get the 2 uploads a week, and I don't beat myself up about that, but that's just something I aim for, and it's enough that can keep me kind of motivated and not burnt out, I guess. So that's important too, to not kind of over deliver too much and then end up burning out.
Right. Absolutely. And when you get to the place where we're kind of starting to make money, you kind of associate more views with more revenue. But to your point, it's like, that's kind of a dangerous game to play, because obviously if you start uploading more frequently, whether you go from 2 days a week to then 3 days or to then 5 or every day, sure, you're going to get more views, but like you said, you're going to get burnt out real quick, and you're going to be fresh out of ideas before you know it. So you got to do it in a way that fits your lifestyle and works for you, and because even posting less, like, it really is, in my opinion, quality over quantity. I even tried posting 3 videos a week for probably a month or so. It just wasn't good. Like the quality of the videos suffered. Maybe like not by much, but definitely I noticed it. So I'm like, all right, back to 2.
I mean, even when you do 3 videos a week, once you have your next one done, you instantly have to think of the next idea because you only have maybe 1 day in between to record. But yeah, we won't go on too much about our struggles for uploading.
I know. Sorry, we went off on a little tangent there.
I think what we'll touch on now is, I think our channel is different in the sense of we're both stock channels, but mine also is a bit of crypto. I don't think you've touched on the crypto space just yet, or I'm not sure if you do any of that, but you're kind of focused on the dividend channel for now.
Yeah, I have not dipped into crypto yet. For a couple of reasons. Number one, it's not something I'm too familiar with at this point. Like, I feel like I listen to a lot of crypto stuff, and I do watch a lot of crypto stuff, like your channel, for example. And I get it. Like, I'm starting to understand it and wrap my head around it. And I'm not one of those guys who is like, it's too, like, what do people say about crypto? They say, oh, it's not, the price isn't attached to anything. It's just kind of the greater fool theory or whatever. And I don't really even put much stock into that, but I don't know. I'm just not quite ready to invest in it yet. I think I'd like to learn a little bit more about it before I do. But one thing that is getting me closer to like pulling the trigger on investing in crypto is the idea of staking. I think that's really cool.
Have your money work for you, kind of.
Yeah, and I think that's very symmetrical to what I do with dividend investing. So that's something that definitely piques my interest and is kind of like getting me closer to like being ready to invest in crypto. But with that said, man, like another thing I'm kind of holding off on investing in crypto, or another reason I'm kind of holding off on it for now, is because I don't have a lot of money to contribute at this point. And similar to not like doing TikTok or Instagram for content stuff, you know, I don't want anything to distract me from dividend investing at this point, especially because I don't have too much to contribute. So I want to put everything I can to what I'm already doing. And then as my income grows and I have more to offer to, you know, my investing, I'd love to kind of expand into that and kind of dip my toe into crypto. And I know it can be said like, you know, you can start investing in crypto with as little as you want, $5, $10, whatever. But still, I'm like, but I'd rather just put that into some more dividend stocks for now. But it is something that's definitely on my radar, and it's definitely something that's in my future plans. But for now, I'm holding off.
Yeah, I think for me with crypto as well, like a lot of people are at that stage where they're aware of it, but they're like, what is it though? Where I don't have the confidence to put $1,000 into it. But like everything I say in terms of crypto is like pretty much don't invest what you're not willing to lose, because if you invest in stocks, I mean, if you're investing in blue chip stocks, it's obviously different with penny stocks, but if you're investing in Coca-Cola, Apple, like the likelihood of you losing all your money is, or if 50% of your money in a short space of time, it's very, very low. Possible, of course, but very, very low. And then in the likes of crypto, like you could invest in a cryptocurrency that may not even be here tomorrow because it's a completely unregulated space and you have to be really careful what you're doing. So no, I definitely get the apprehension there, but I think we'll touch on, I guess, why you've gone for the dividend kind of style, because my channel is more around growth stock investing. Now, obviously, I do hold some stocks that will pay out a dividend, but I wouldn't say I've made a dividend-based portfolio. And I will get back to it in a second, but when I started out investing initially, I was trying to base it around a dividend portfolio because, as I said, I seen the likes of like Andre Jick, and then they like showed their portfolio and he had a load of different dividend stocks and the monthly dividend income, and I was like, that's like a second salary nearly. You know, you can actually, like, obviously you need quite a big lump sum invested to get for the dividend yield to pay you out a nice bit each month, but obviously everybody has to start somewhere. But I thought that was a real good thing. But I guess, why have you gone for more dividend side of things opposed to, we'll say, the growth stock side of things?
That's a good question. And prior to strictly investing in dividend stocks, I did have some growth stocks. Like there was one, like I said earlier, like the first handful of stocks that I had were like Sirius XM Radio, Berkshire Hathaway, which don't pay a dividend. Mm-hmm. And then one of the growth stocks that I bought on my own was a company called Coty, and the ticker symbol is COTY. And I actually have a couple of videos on my channel where I talk about my investment into that. But with those, dude, I just found myself like checking my account probably 100 times a day, just seeing what it's doing. And that's because like the benefit from what I can see, the benefit to investing in those type of companies that don't pay a dividend is that you are solely relying on them to go up in value, which most do. I mean, the Googles, the Amazons, whatever, they've, I cannot argue that they've really, people have made a lot of money by investing in those stocks. But I also really like the idea of not, someday, like when I'm ready to retire or when I'm ready to live off my investments, I don't like the idea of having to sell these assets that I've been buying over the years to live off of them or benefit from them, because I don't want that to run out someday. Or
I guess you have nothing left, and then you'd have to pay your taxes and lots of things to consider then. But when you reach that stage and have the dividend income, that'll just consistently pay you out, I guess, passively, so you wouldn't have to do anything. So no, I definitely get the appeal for that. So I guess the reason you've gone for that is kind of you're trying to build up a portfolio, I guess, for retirement or even whenever you're ready to live off these dividends, and they'll supplement your income or make up all of your income without you actually having to sell the stocks, and that's what you're kind of aiming towards.
Exactly.
So I guess on the other side of things for me, so as I said, like 25 at the minute, and I don't plan on using a lot of this money too much in the short term, but maybe I'm hoping in the next kind of 3 or 4 years I may be looking at buying a house, and I may need to access some of my investments then. And I think, that's a lot of people say, oh, never sell, but I think you have to recognize as well, like I'm investing to kind of build wealth, I guess, and to help me kind of move on in life and buy the house and get some things that I want. So I think it makes sense if you have a goal that's maybe 3 to 5 years out to invest your money, of course, because you're getting more return. So I think for me, the reason I've gone for growth stocks, and as I said, there are a couple of dividend payers in there, but it's for kind of growth. I'm trying to get a good bit of growth, kind of, I think it's capital creation, they call it, opposed to capital preservation, which I feel like dividend is a bit more of. So I'm trying to get those, I guess, like, I'm trying to think of a nice figure, like not a 10x, but like I'm just trying to like get my money in the next couple of years to maybe if I could double in the next three years, and I just don't see that happening with dividend income. But I do really love the idea of dividend income, and I think it's something I'll definitely move towards kind of maybe after I have my house and I'm investing again on a consistently basis after that, and I have kind of some big purchases out of the way. But yeah, no, it definitely makes sense what you're saying there in terms of building it to kind of, that'll fund your lifestyle, I guess, when you're down the road and you won't have to sell your investment. So there's definitely pros and cons to both, but I feel like growth stocks for me at the minute are more kind of capital creation, and then for dividends it's more kind of preservation and getting, I suppose, that kind of monthly income or that yearly income as a bit of a supplement. Because I know for me as well, like dividends, the reason I don't want to invest in dividend stocks too much now is because when I get paid out I have to pay tax on them, whereas if I'm just leaving my growth stocks kind of sit where they are and grow, I'm not having to create them taxable events right now, and I can just kind of let it all kind of build together. But that'd be kind of my side of things on that.
Yeah, and that makes sense.
Both are very valid strategies.
That makes sense too. You've got a plan for that money, a short-term plan that you want to use for those funds. And so obviously for what you're trying to do, if you're trying to use that money to buy a house in the next couple of years, yeah, you're going to need as much capital as you can, and it's going to be easier to put it into something that's going to appreciate exponentially, like the growth stocks or even the cryptos that you're investing in, versus dividend stocks, which the method to the madness with dividend stocks is slow and steady. Okay, you're not going to get rich. You're not going to build wealth overnight. It's a long-term game. So yeah, for your current goals, it doesn't make the most sense to invest in cash flowing assets like that, because you need quicker growth for what you're trying to do.
Yeah, and I feel like a lot of people have, like you said there, it's slow and steady, but even with growth stocks, I guess it can be slow and steady as well. Like I'm definitely not expecting to become a millionaire overnight or anything like that, but I feel like a lot of people with the whole GameStop and AMC, we won't touch on it too much, but I feel like they've just become extremely impatient and got the wrong idea from what the stock market is, because like I guarantee most people that have invested in GameStop and AMC, it was too late for them. They ended up losing money, and that could potentially turn them away from the stock market for life. They could have their kids coming up to them later down the road and say, I want to get invested in stocks, and they're like, no, it's a bad idea, you can just lose your money. So I feel like it's all about your approach, and like there's no really hack, that'll make you a millionaire overnight. But sure, it can make you a millionaire over 40 years, dividend investing or growth stock investing. It's just all about having that patience and not expecting quick wins too easy. Now, of course, they can happen, but I feel like people are just too impatient now with that whole GameStop and AMC thing.
Yeah, the whole GameStop, AMC thing, even kind of the Dogecoin thing, man. I look at that, and I don't know, obviously I don't know this to be fact, but I would imagine a lot of the individuals who invest in stuff like that, they're just reading headlines, they're just seeing things on social media or out on the news, and that's why they're investing in that kind of stuff. But as you and I know at this point, just because we're kind of more in this world and do this more often, like if it's in the headlines, if it's you're seeing it on social media, it's too late. Like you've missed the boat.
Yeah.
And
I mean, it's different if you're on them Reddit forums like Wall Street Bets, and where this initially came up, the GameStop thing, like a few months prior to it having that short squeeze. Like then, sure, you're in the money. But again, once, as you said, a great point. Like I've heard that phrase before. Like once you hear about it in the headlines or mainstream media, it is too late. So, but I think it has brought a lot of people to the investing space, and hopefully some of them have found channels like ours where, you know, we might have some sensational headlines sensational thumbnails and captions and that, but I think if they actually sat down and watched the content, we're giving somewhat solid advice, or I suppose not financial advice, but somewhat solid knowledge, I guess, from our experience in the market, and just kind of relaying that, you know, don't expect these quick wins. Sure, they can happen, but yeah, I just thought I'd touch on that quickly, because I think at the end of the day, the growth strategy and the dividend strategy, both very valid strategies. Maybe you can achieve your goals in different time frames, but both of them, I suppose, are, you know, buy and hold and keep it for a while. And we're not expecting to become overnight millionaires, and it is all about patience. But I just want to get your opinion on something as well. So my portfolio, I'm not sure if you've seen it in my portfolio updates, but I currently have 65% of my portfolio, in my stock portfolio, dedicated to Tesla. So from somebody who's investing in dividends, I wondered, first of all, what is the highest percentage of one of your holdings that you have? Or are you nice and well diversified? And then what is your opinion on my 65% weighted in Tesla?
That is a great question. Wow, 65%.
I think I will give some context as well. So I quickly looked up your portfolio value for your dividend income, and I think it's about $25,000 as of June. I'm not sure, is it gone up since then, or somewhat in around that level?
Yeah, so my portfolio is currently valued, I actually have it pulled up here, at this time, $27,455. My dividend income, my annual dividend income, is about $1,200. So I'm averaging about $100
I don't have
a month.
my dividend income figure for you, but my stock portfolio is also about $27,500. Yeah. So I think we literally have the same size portfolio value.
Yeah, I saw that. It was cool. We're like right at the same spot there.
So I think that 65%, you can now kind of apply that to your portfolio and that kind of risk weighting, and how do you feel about me doing that? And I guess, as I said, what's your kind of highest weighted position?
You know what, man? I don't have any negative thoughts about that. I really don't. Like, which might be surprising to hear, because my personal rule of thumb is I try not to have over 10% into any one stock or any one company. But that's just my own preference. And I think if you're going to put a lot of stake into one company or one stock, you might as well, you got to make sure it's at least a good one and a good company. And from what I've seen, man, like, I really don't have anything bad to say about Tesla. Are they profitable at this point?
I mean, yeah, they are. They had $1 billion in net profit last quarter.
Okay, so yeah, I mean,
crazy numbers. So.
Dude, I really don't have anything negative to say about that. I personally wouldn't do it, but you know, like I said, this stuff is all preferential, and people are making a lot of money on Tesla. So
I think because I have a bit of age on my side as well. Like,
yeah, that's another.
I'm not
that's
super
a good
young,
point.
but I guess 25. I have time to. If I do lose my money, I can build it back up. You know, it's not like I have a family and kids to feed and all. And I'm absolutely risking everything. If I was in that situation, obviously I wouldn't be going for these crazy portfolio weightings. But I feel like I do have a bit of time and age on my side for now. So that's why I've kind of gone for that. But it is kind of hard to argue, I guess, in one sense, because it has done well. I mean, I've said in my last portfolio update, if I only invested in Tesla, I think I have about 30 stocks, but some of them are very low weighting. But if I only invest in Tesla, my portfolio would be up more than it is spread across all of them things. So all of the time I wasted picking them other stocks, not wasted, I guess, but all the time I put into picking them other stocks, all them times that I put into other stocks, I could have just put in Tesla and have more money. But, you know, that's part of the enjoyment of it as well. But yeah, no, I think I like my conviction in it. And I think every time I've been buying Tesla for the last year and a half, like all the way at like pre-split as well, pre the stock split, like people have been saying, oh, is it not worth too much, the stock price? And I'm getting that all the time. Every time I buy it, like people are like, oh, it's too late for me to buy in and all that. But I mean, if you find good companies, even if they're at a bit of a high valuation, and you plan on holding them for the next 3 to 5 years, likely you're gonna be up. Like, not guaranteed, but if you find a good company that has solid growth potential, and I think it makes sense. But obviously, if I put 65% into some other kind of penny stock or something, I'd probably be a crazy man. I'd be better off in Vegas, I think, if I was at that kind of stuff. But
yeah.
Yeah, no, that's interesting. So you keep everything definitely below that 10%, or has there anything that you've kind of let go of that 10% as of now?
As of now, and that could change. Like, there's a couple stocks where I would make an exception to that. One example being Procter & Gamble. Like, I would have 20% into Procter & Gamble and have no issues at all. Yeah. And going back to Tesla, I mean, you know what? You're a smart guy, and I would imagine that you wouldn't put that much into Tesla if you weren't up on it and didn't see good results
I'm
on
kind
it.
of confident in how it will do. Yeah.
You know, man, do what works for you. I'm sure it's going to pay off. And you know, worst case scenario, if Tesla starts to go down, which it's not going to completely crash overnight. That just doesn't happen. Go to zero overnight. But if you notice it start going down and that just becomes the trend, and you'll be able to get out and be just fine. You'll be okay. So I don't have any, like I said, I don't have anything negative to say about that.
Okay, so just in terms of your dividends then, Ryan, in terms of how you pick them, so what I try to do for my stock picks is I try to do pretty much a good lot of research in. As I said, I've maybe like 20 stocks in there. Some of them I've put in based on ARK ETFs, they're kind of things for like their genetics one. So I won't lie, I haven't done full due diligence on some of the stocks I have, but they're very small weighting in my portfolio. But basically anything I'd have, even around 5% or more, I'd have done quite a good bit of research into. So for you, I'm not sure exactly how many stocks you have. I think maybe when I checked, you have maybe about 20 stocks or so. Have you done like a lot of due diligence into each of these, or you're just saying this is a good yield, they have a good kind of history on paying their yield? I don't know a whole lot about what they do, but I'm happy to add them into my portfolio. Or do you literally know them businesses inside out, I guess, to a certain degree?
There are some that I know pretty dang well and have done a lot of research into. But then there are others, especially ones that I bought when I first started investing, that I really just bought because I thought they were probably good companies, like Coca-Cola, for example. I didn't buy, buying into Coca-Cola, which was one of the first dividend stocks I bought into. I obviously I know Coca-Cola. Everyone knows Coca-Cola, but I didn't know anything about their fundamentals. I didn't know how much revenue they were doing, what their net income was, I'm sure I looked at their dividend yield, but I probably didn't even know what a payout ratio was, or how many years of dividend growth one should look for. I didn't know any of that stuff. I just figured Coca-Cola is a good company, so it pays a dividend. Let's give it a shot. But then there are others like, let me see, like what's an example of one where I probably did a lot more research on?
I think it comes back to as well what you were saying in terms of you're always learning and stuff. And I think the fact that when you do YouTube, when we're going to get behind the camera and talk about different stocks, it nearly encourages us to do more research and learn more about, like, I could just throw money into Coca-Cola tomorrow, but if I had to jump in front of the camera and bring a video, I need to make sure I know what I'm talking about. So I think that really helps with the research as well, like kind of researching it for our subscribers, I guess, but also us at the same time.
Yeah.
And I guess 3M, are you invested in them? 3M?
Yes.
They're a pretty good dividend payer.
Yes, 3M is actually one of the top performing stocks in my portfolio. Actually, maybe the second top performing stock in my portfolio.
I feel like that's one where people don't know, they know they're manufacturers, but they don't know exactly what they make because they make such a wide variety of things. And that's one that, again, you can look at the dividend yield and you can see the history of the dividend payments, and that's nearly enough for that stock. You can be like, they've done it for the last 50 years. Yeah. I can't see what they won't do for the next kind of 50 years. So, and again, that comes back to the weighting of your 10%. Like, you're not putting too much risk into these things. So, of course, you need to do the research, but it's not like you're putting everything into one where you need to do endless research. Like, you have that risk weighting, I guess. So
right. And as time goes on too, as time goes on, you learn more about the stocks that you're invested in, just as you keep up with news and different analyses of them. Like, I spent a lot of time on Seeking Alpha, just reading. Are you familiar with Seeking Alpha?
Yeah. I've read that a couple of times.
I spent a lot of time on that website just going through different analyses of the stocks I already own, just to see what other people are saying, and even that helps you learn a lot more. And I can say I'd say for the most part, I did some research on a lot of the stocks I own. Not a whole bunch, but some. But then as I bought into them or continued to buy into them, I'm learning more about them as I go. And so far, I've made some pretty good picks, I think, so far. So it works out. But as time goes on and I learn more about dividend investing and how to analyze stocks, I'm taking it a little bit more slowly before pulling the trigger on investing into stocks. Mm-hmm. And I currently have, I think, 18 different stocks in my portfolio. And I'm at a point right now where I probably wouldn't want to, like, if I'm going to add any more, I don't want to add a ton more because I want to just continue growing the positions that I already have. And so if I'm going to be adding any more stocks to my portfolio, I'm going to be doing a whole bunch of research. I'm going to make sure, like, I know these, if there's any new companies I'm adding, I'm going to make sure I know them to a T and really understand why I want to add them to my portfolio, because I don't want to add any more right now. I feel like I'm in a really good spot with all of my holdings, but if I'm going to add any more, I really need to understand like why I'm doing it. I better have a good reason for it.
I think that's fair because, you know, if you have a portfolio of $200 and you have something at 10%, it's what, $20. You don't have to, you're not putting too much risk, but as your portfolio grows to what it is now, 27,000, and you're putting in 10% into something, you have to do a lot more research into these things because it is obviously a lot more money. So no, I completely understand what you're saying there, and you kind of want to have a good grasp on all the companies that you're invested in, so you don't want too many in there. So yeah, that definitely makes sense. So I guess if you had 2 dividend stocks for the audience here, what would be your kind of 2 favorites? Of course, everyone make sure you do your own due diligence into these.
Yes.
Ryne is not saying go out and buy them straight away, but what are your kind of 2 favorites maybe?
Okay, I'm going to answer this and I want to hear yours, okay? Okay, so probably my 2 favorites are Starbucks and Procter & Gamble. I love investing in both of those companies. A quick summary on
why they are the best?
Sure. So Starbucks, because I'm a big coffee guy. I mean, you've seen some of my videos. I have a coffee cup in every single one.
Yeah, I've seen the coffee cups to Starbucks. And Graham Stefan would not be happy.
No, he wouldn't be happy. But to make it a little bit easier, make it a little bit better, I buy the beans. I don't go out to Starbucks every single day. I buy the beans for home. So there's always Starbucks beans in my cup. I love Starbucks. I love drinking Starbucks. I love going to it. I love walking in and smelling it. Everything about, which might be weird to say, but I love everything about Starbucks. And you know, it's the top performing stock in my portfolio. My position's currently up over 20%, 21%. And although the dividend is not it's not a very high dividend yield. I think it's in the 1%, maybe the 2%. I don't know off the top of my head, but it is growing pretty quick. And like you, I have a lot of time left to invest. So I can be patient and wait for that dividend yield to grow. And in the meantime, I'm establishing a good yield on cost with Starbucks. So in a nutshell for Starbucks, I love it just because I love coffee. I love the Starbucks brand. I love the whole experience of Starbucks. Everything about the business I really enjoy. So that's why I buy into it. And going on to the next one, Procter & Gamble, which is really not another high yielding company. I think it's somewhere in the 2%. I don't know exactly though. But Procter & Gamble is one of those companies that is so, in my opinion, so reliable and so secure. It's just one that I'm never gonna have to worry about. And I film in like my living room and I'm just looking around in my kitchen area and stuff. And I see probably 3 or 4 different products just in my vicinity here that are owned by Procter & Gamble. And so the bottom line here, the point I'm trying to make is that Procter & Gamble owns so many different brands that are used and needed by so many people that I feel like it's such a reliable company to invest in that will always be that way. Things like shampoo, toilet paper, Kleenex, house cleaning supplies.
Staples. You can't do without them. They're just kind of there like that.
You can't do without them. And diapers. There's always going to be a need for things like this, and so that's another reason why I love, or that's the reason why I love Procter & Gamble. Plus, as far as their dividend goes, they have a really solid dividend history. So they've been growing and paying their dividend for the last 64 consecutive years, which is like almost 3 times longer than I've been alive. And so that's another reason that I really enjoy buying this company. And that's one reason why, or that's the reason, those are the reasons why I would break my rule of thumb 10%, you know, in any one stock. Why I would break that for Procter & Gamble, just because I feel like it's so reliable. And I think there's other examples of that same thing too. Like Clorox is another great company that I could probably say the same thing about. Same thing with Kimberly-Clark, which is very similar to Procter & Gamble, but just owns different brands. So does that make sense?
Yeah, definitely.
Yeah.
Okay, so I'll jump into that. They're very fair, and then they sound like 2 great stocks. I've heard of both of them, obviously. So they're big companies out there as well. It doesn't sound like you're taking too much risk on them. For me, 2 dividend stocks. Again, it's not really my kind of forte, I guess, dividend stocks, but 2 that I've included in my portfolio are Apple. Anyway, I think they're just a really good mix of a growth stock and a dividend paying company. Again, they don't have the biggest yield. I don't even know what it is off the top of my head, but I'm sure it's around that kind of 1.5% max, I would say. But I just think they're a good way to get some dividend income, but also have exposure to the growth stock side of things. And another one that I used to have in my portfolio, don't have it in currently, but I think that 3M, I think if you're going for a dividend paying stock, I think they're just absolutely, I think they're called a dividend aristocrat because they've been around so long and have that consistent track record. I think they would be another one that is just solid. And I'll give just a special mention to PepsiCo as well, because they're one that I really like as a stock as well. You know, I didn't know before I did the research, but they own things like Doritos and Mountain Dew, I think, and things like that as well. So there's a lot more to these businesses than you may kind of think at first. But yeah, they would be my kind of top 2 and maybe 3, I guess. Okay, so we're nearly finishing up here, guys. What we're going to just get into now is, I guess, mine and Ryan's plans for the next, I guess, couple of weeks, if not months, of the year. Kind of what our plans are. Is it just basically doing what we normally do in terms of like maybe just dollar cost averaging in? Are we waiting for dips, or how do we see things going? So I guess I'll leave it to you first, Ryan. How do you kind of see things going in the next couple of months? And what's your plan?
Well, obviously neither of us has a crystal ball, so it's pretty much impossible to predict what the market's going to do. I feel like I've seen it go down lately, and then it's kind of been coming back up. I feel like it's kind of doing this a little bit right now. As far as what the rest of the year is going to look like, I have no idea. But I dollar cost average my way into the market. I invest every single week, so I'm going to continue to doing that. At the time, I'm working on actually building up my position in Procter & Gamble a little bit more. I'd like to make it probably another 1.5% more of my portfolio than it is now. I think it's about 4%, maybe more than that. I don't know, but that's kind of what I'm doing in right now. I really would love to actually take a page out of your playbook and buy into Pepsi. Like you, I just am recently learning about how great of a company Pepsi is, not only just in terms of performance, but the different brands that they own. It's insane. Gatorade, Doritos, like you said, Lay's, all these iconic brands, or all these iconic beverage and snack companies. And that's kind of my next move, I think, is adding maybe Pepsi to my portfolio. I've even looked at adding Intel to my portfolio and building like an infotech position, because I don't currently have any of those stocks in my portfolio, or even Microsoft, but Microsoft's pretty expensive right now. So as far as future plans go, man, I'm just going to keep on keeping on. I'm either going to add like one of those 2 stocks to my portfolio, or I'm just going to continue increasing in the positions I already have. I'm not quite sure. I'm going to have to see what's looking good after I finish buying into Procter & Gamble. So how about yourself?
That's a very fair point again.
Yeah, what's going on with you?
Yeah, just in terms of like, we can't time the market. I mean, you could plan for hours what you're going to do if a dip comes or if this happens, but you just kind of have to have a strategy that I guess you can apply just every single week or every single month. So again, for me, it's more kind of dollar cost averaging. Generally what I do is I use a pie feature, so essentially like my own ETF. It's not technically an ETF, but when I invest, I'd invest maybe €100 and it'll go into the pie, all into these different things. So it's not like I'm buying one stock individually, but I can adjust the weightings and all that kind of thing in it. So again, for me, what I do is mainly I get paid monthly. So at the start or end of every month, should I say, I load up in, we'll say, if I'm investing like $600 or €600 each month, I'd put that into my stockbroker at the start of the month, and then I plan to generally every single week just dollar cost average into my kind of pies, which have all my different stocks in it. But what end up happens for me, and I need some more discipline in this regard, is that if I see a dip in something like Tesla, and obviously that's quite a high percentage, I'll just go ahead and put like all my money for the month in that day. And often it can work out, but often maybe a further dip comes the next week. So I just need to get more kind of discipline, I guess, in terms of dollar cost averaging. And I think it's just the best thing to do. And I think it's important to maybe build up a cash reserve as well, that if we do see some kind of opportunities where we get a 20% dip or something like that in the market, that we're able to kind of capitalize on them. So for me, it's just building up my cash position right now, I guess, on top of my emergency fund. And then it's also just a matter of me kind of continuing to dollar cost average into the market, because as you said, we can't really time it.
And by the way, man, like to that point, that's a really good strategy, especially right now when many stocks are so highly valued. You're probably better off like looking for value and buying value right now when things are dramatically, I don't want to say overvalued, but pretty expensive to buy. Like it's hard to find a good deal on the stock market right now, it seems like.
Yeah. And we don't know when them deals will come. Like it could be 3 or 4 more years where the whole stock market is overvalued, and obviously you don't want to miss out on 3 to 4 years investing. So it is just a matter of kind of buying and holding. And obviously it's good that we have time on our side and we have a long kind of life of investing ahead of us, hopefully. So we can kind of buy them things now, and the likelihood is in 5-6 years, even though it could be high now, it'll be probably higher in the future. Okay, guys, so that is going to cover it for this video, this first kind of podcast style. Please let me and Ryne know down in the comment section below, first of all, how we did, if you found the conversation interesting, if you want to see Ryne back for another podcast as well, because I feel like we could talk for hours here, but not only are our cameras running out of battery, but we have to not make this video too long as well. But yeah, again, thank you so much, Ryne, for joining. It was great to have a chat. It's my first time kind of doing this with someone in the YouTube space for the stock market thing, so it was really, really helpful, and we'll definitely stay in touch. And as I said, if the audience wants you back, you could find yourself back here.
Awesome, man. Well,
soon.
Anytime you want me to come back, I'm happy to do it, man. I had a blast chopping it up with you. It's fun to talk to someone who does other things besides dividend investing. It's really cool to hear other points of view.
Yeah, different perspectives and all, but yeah, absolutely. So if anyone has come over here from Ryne's channel as well, I would definitely appreciate if you subscribe to the channel for more kind of content like this. And for any of you seeing Ryne for the first time, definitely go over and check out his channel. As he said, he's becoming an expert over here on the dividend investing and the dividend stock, so definitely go and check him out. So again, if you enjoyed it, please drop a like on this video and a comment letting us know your thoughts, and I guess we'll leave it there, Ryne. Thanks very much.
Yeah, thank you, man. I'll talk to you later.